And if those two things come into the public policy framework, then we can grow the industry from a $2 trillion industry to a $200 trillion industry. But if those things stay outside of the public policy framework, if you try to move security tokens around with 100x leverage with no KYC offshore, then you're tripping over treasury restrictions, commodities restrictions, securities restrictions. That's not going to last. They're going to shut it down.
So what's the view on stablecoins? How's that going to develop with the sheriff coming in and maybe saying to Tether, it's not enough to just publish something with stuff that you supposedly own without even naming your banks that you do business with. So what's going to happen there, and how is it going to change stablecoins?
Well, I mean, first, why does the world want stable coins, right? We need them to run a 24/7, 365 crypto economy with high speed, low friction. But the world also wants stable coins in places like Lebanon and Turkey and Argentina and Afghanistan, Africa, where the banks are either seizing the dollars or the banks don't offer dollars, or you don't trust the banks to not freeze your assets. So stable coins are pretty useful. I think they're critical to the future of the economy. And I think the regulatory view, and this is expressed in the President's Working Group report. There was a report on stable coins that came out about a month ago, and it was jointly authored by the SEC, the CFTC, Treasury, with the cooperation of the Justice Department, the IRS, and other parts of the White House. It was pretty cross-departmental. What they said was, stable coins have a use in the economy, but the present situation is such that the organizations issuing them are not transparent, and they're not sure they're backed one-to-one, and they don't comply with current AML, KYC, anti-terrorism, anti-money laundering act. So if it's going to continue, it needs to come into that public policy framework. What they did was say, they pretty much said Congress and Senate should pass a law that mandate that banks that are FDIC insured issue stable coins. And if you're going to issue a stable coin, you need to comply with AML, KYC rules, and then you need to be an FDIC insured institution. And then they said, until Congress passes that law, they're going to regulate stable coins at that same standard. So, conclusion, that the industry is moving from an entrepreneurial state to an institutional state. The first decade were entrepreneurs. They were moving very fast, and they didn't have the licenses. They're not public companies. They're not public banks. They're not FDIC insured institutions. They're not in the public policy framework. They're not regulated. And in that world, Tether, Circle, and others, they reached about 30 billion in stable coins a year ago, and then demand exploded, and now they're 130 billion. But having said it all, they're not in the public policy framework. I think the regulators realize that stable coins are either going to 10 trillion or they're going to zero. And if stable coins or the stable US dollar is going to go to 10 trillion, we need to actually rotate from entrepreneurs to institutions. So this is a crossing of the chasm and a maturing of the asset class. All of the companies that are currently issuing stable coins will either need to become banks or publicly traded companies or regulated exchanges, or they're going to get squeezed out of the market. And I think the regulators were kind of saying two things.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
They were saying if you're in the business, you need to become regulated and transparent, and you need to back your stable coins one for one. You can't put 50% of the assets into unknown credit instruments that we don't understand, and you can't be private offshore. They were saying that. The second thing they're saying is they're giving a green light to JP Morgan and Citigroup and Bank of America to issue $1 trillion worth of stable coins each. And so I think if you look at the industry, right, what you have is $500 trillion of money in the hands of public companies, public banks, chartered banks, and public investors. And they're staring at the crypto economy, and they're afraid to come in because they're not sure whether stable coins are are kosher to issue, if it's okay to issue them, and whether crypto is property or it's a security. That's why they didn't want to come in. You've got the entrepreneurs that are under no such compunction. They're going fast and breaking things because they're making billions or tens of billions or hundreds of billions of dollars. There's a lot of money there. They've been moving rapidly. Now you've got the regulators led by the SEC and Chair Gensler. And Gensler is probably the most informed regulator on crypto in the world. He studied it and he taught it for 3 years at MIT. He knows crypto probably better than any of the crypto entrepreneurs. And he also knows the law, and he also knows trade finance and banking finance, and he understands commodities and securities probably better than anybody in the industry. So what he's saying is it's time for the industry to grow up, and Bitcoin is good. Digital property is good if it was issued fairly, right? Satoshi's innovation was to create a token with no pre-mine that traded for a year without any market price, where there is no central control, that is fair and equitable and decentralized. That's the innovation. She says if you've got digital property that's common property and it's fair, then that's an innovation. And stable coins that are issued by banks that can move currency at the speed of light for free, 24/7, 365, that's useful. And if those two things come into the public policy framework, then we can grow the industry from a $2 trillion industry to a $200 trillion industry. But if those things stay outside of the public policy framework, if you try to move security tokens around with 100x leverage with no KYC offshore, then you're tripping over treasury restrictions, commodities restrictions, securities restrictions. That's not going to last. They're going to shut it down. And what they said yesterday and what they've been saying in testimony, but I hear it getting more intense. What they said is if these security tokens and these DeFi exchanges don't come into the SEC and come into compliance, they're going to launch enforcement actions, and they're going to begin to use enforcement as a tool more generally. There are already a lot of enforcement cases, but there'll be more. If your goal is you want to see the industry grow by a factor of 100, but it's going to put more regulatory constraints on people in the industry if they want to actually issue these tokens and move them around.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow. in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.